Financials rebounding a bit today after yesterday's massive sell-off with the bank's ETF, the KBE, up 1% today, still down, though, more than 7% for the year. Joining us now for a closer look at this sector, Tom Michaud, President and CEO at KBW, a Stifel company. Tom, good to see you.
Good morning. Good to see you.
I would say over the course of this year, it's been maybe one of the more confounding behaviors of this market, which is everyone came in thinking that the bullish path for bank stocks was pretty clear, didn't really play out. What do you think is weighing on the group right now? Is it just this typical, we're getting close to the end of the cycle, yield curve flat?
So there were two big things that happened in banking in October. October was a terrible terrible month for the stocks. The first is that earnings changed analyst expectations for growth in the future. We, on average, took 2.5% out of our earnings per share growth rate for out years. And predominantly, it wasn't because the economy had turned. It was because of increasing competition. So I think that was number one. Number two is I don't think you can talk about a sector today without talking about ETFs and passive investing. About a quarter of the flow that had come into bank stocks since the election has now left, and a lot of it left in October. So actually, since October 24th, which was the low, bank stocks have now been outperforming, but they got creamed in October.
And you mentioned that the earnings expectations got moderated a little bit. What can actually change that story, if anything, right? I mean, credit costs, they're not going to get easier necessarily as the cycle goes on.
So I think you just described peak profitability, which we get that question all the time. The banking industry has recovered its profitability since the crisis. So the question is there a 25% improvement from profitability here? We don't think so. We think that the entire group of stocks is very cheap relative to the market. Regional banks, the cheapest since 2004. Okay, very cheap relative to the market. And now you're going to have to pick winners and losers.
I expect you would love to see a bit of a merger frenzy start up here. Is that going to happen?
That is a great idea. Actually, well, it's a good idea because I think it is happening and it will happen. But it's happening a little bit more slowly because, frankly, we just have fewer banks than we used to have. And I would also describe us now as being in a pause. With stocks moving like they have, very hard to do M&A. So I think it'll still happen, but it'll probably pick up once we get some stability in the stocks.
Can I get back to market structure for a second? You mentioned sort of the role of ETFs. We talk a lot about algorithms. Mike certainly follows all those things closely. How much is that changing the way these stocks are valued and trade? And what should we do or think about it?
So I think a couple of things. I think, first of all, it changes the way they trade a lot. I've worked on a trading floor for 30 years. There used to be a tremendous amount of noise. Sometimes I'll walk out and I'll say, the market's open because all the stocks are trading electronically. So the speed has changed, okay, at which they trade. And then also the passive investment has grown to the point where there's more of a sector call to how the stocks perform. And we've got plenty of banks that we research where passive and quantitative investors own 40 to 50% of the shares. So I think it's gonna make it harder to outperform the group. But I'll tell you where the biggest punch is in corporate governance. Because now you got a handful of investors that are voting 30% of America's shares. And that's going to be a big question over time, and I think it's going to need more attention.
But you're saying there's no price discovery then, or not as much?
Well, you know what actually happens is there's less liquidity from folks who are paying attention to new news, and I actually think it'll make volatility go up. And I actually think for folks who do a lot of research like us, it's going to be an opportunity. And for investors who are willing to do that opportunity, I think you can trade against the machines and make money if you know the fundamentals better.